All right, welcome everyone. Welcome to the Hurley Investments Market View Commentary for the 22nd of April. Good to be with you guys tonight. I just started our Market View Commentary, and now I've got the correct date that's in there. Let's start off tonight with an update on Meta. And I'm going to start off pulling up a chart because it was awful. If you take a look how the chart opened up today, started up at 485, all the way down to 475, touched up to almost 490, and finished back down at 481. Short answer is today we sold out of Meta. And your short answer is, if I can get me back over here, the short answer is each share on an average price made roughly $250 per share, or 25K per 100, can't type correctly, per 100 shares. And don't forget, half of the shares we picked up 100% paid for with put profits. Now, a little bit frustrating because we did not hit the highs on Meta. And to be honest with you, I would have loved to have gotten called out last Friday, but last Friday, each 100 shares made, got to do the numbers, $910. Made $910 with the, can't type, with the covered call strategy. And we still have stock replacement positions in place. So we didn't give up on Meta. We're just here. We're running forward. Yes, I did not get it at the highs. I wish I could tell you guys, oh, I magically picked the highs for the day, for the week, but it was a great return. We basically freed up almost $4 million for individuals on the share counts. We also closed the 240, 300 bull calls with 84% of the total potential profit. And we also closed down the 300, 350 bull calls for 72% of the total potential profit. So we were taking some profits off the table today. The good news is, on those shares that we picked up with the put strategy, where we doubled up on your share count, all that you've already paid taxes on. If you're in a taxable account, that the money that we used to purchase that stock, we already made a profit on that on the puts. You've already paid taxes on that. So that will not be an issue. Not to mention, everything share count is long-term capital gains. So it will not count as a short-term capital gain or earned income for you. Russ made the comment, but you kept the 475.40s? Yes, in fact, we still have 470.540. We still have 500 550s. We still have 520, 600s in play. And these are, again, they're technically leap bull calls. Let me take a quick peek. We might have one other set in here. I can't believe how many sets we've had. And we've run, for those of you who are not into stock ownership, we did run multiple stock replacement strategies in place. Yep, we did have, so we have the 360 400s. And then there are actually still a couple 400 460s in play. So we still have 5 different kinds of sets. Not everyone is in all of these, but we do have certain sets for certain people so that we can keep making people money in different times as different people came in, as we were taking profits. So I actually had 7 different stock replacement strategies, these leap bull calls, in place. We shut down the 2 most profitable ones. We shut down today. So today was the day that we were like, you know what? It's time to take that profit. And yes, we could have done it like $7 better, and we didn't. We wanted to, we tried, and we swing and a miss was my best answer on that one. So a lot of you are cash rich right now. So I should say, so now we are cash rich in accounts. Some of that's going to move over to Micron. Some will add shares to current positions. And the short answer is we are looking to introduce 2 new positions to accounts. But it will most likely be a middle of May entry into the positions. And yes, for those of you that don't know, a bull call is the right to buy at a lower price than you are obligated to sell. So if you see a 360 400, you have the right to buy at 360, you're obligated to sell at 400. You can make a maximum of $40 in between that pricing points, or those strike points, minus the cost it took to get into the trade. 400, 460, you can make $60 minus the cost of getting into the trade. 470, 540 on that one, you can make $70. The 500, 550, you can make $50. The 520s to 600, you can make $80. And it's minus the cost basis to get into those positions. Everything has at least 100%, if not a 150 to 200% possible return in each of those trades. So we're really looking quite well at this time. Russ, does that answer your question? All right. The next point was given to me from an individual. According to my records, you haven't activated your 90-day trail of the SPY Trader day trading program. And this is a copy of the email. Oh, we make so much money. If your trading account's less than $25,000, you have margin in your account. You can ask your broker to disable margin. Very simple to do. Oh, we get these recommendations every week. These strategies, you're going to make so much money. Where profits run. Hey, it's a father and son team. Bill and Greg Polos. It was named after saying, cut your losses and let your profits run, which most traders know well. They make so much money. They're Greek immigrants. I mean, I went through this. I just about threw up in my mouth. He worked in the General Motors Institute. I mean, they talk about everything and how they're so successful in trading that they don't need jobs. Yet here they are selling you this. And I just found it interesting because the disclaimer is really not hidden anywhere. Profits Run is a research publishing firm. None of the content provided by Profits Run or its products or services should be construed as an offer to sell, solicitation to buy. I mean, after all of this crap down here, is how you're going to make so much money. You're responsible. It's appropriate. Information may be deemed to be investment advice, recommendations, connection to particular security. Such information is impersonal, not tailored to the investment needs of any specific person. So if you were to go look up profit runs, it gives you this whole story on how these guys have made all of this money. But if you click on the disclaimer, it pops open a ton of legal technical jargon. So here you've got all these programs. You got all these ways to make money. I mean, it just talks about all kinds of, it's so easy, unseen opportunities. This team of people that are here to make you all of this money, right? You're going to retire rich. Look at all these guys. They're this or that. Anyway, let me go back to the disclaimer. Profits Run is a research firm. They're not licensed, bonded, insured. It's an upsell. It's not a registered investment advisor, which I thought was kind of funny because it does not provide individual trading advice. Yet that's just what they sold you on, is how these guys do this and they make all this money. Anyway, you can keep going through, but this is where I thought was hilarious, and it really kind of pisses me off at the same time. Unless noted otherwise, specifically noted otherwise, all profit examples provided by our websites and publications are based on hypothetical or simulated trading. This means the trades are not actual trades, and instead are hypothetical trades based on published market prices at the time of the recommendation. No actual money is invested, nor are any trades executed. Yet everything you talk about when you go to these guys is how you're going to just retire doing this garbage. So here's my simple recommendation. Emails with profit expectations need to be read very carefully to find the BS. I'm shocked. I give a lot of these off to the I run them off to the SEC. I think there's a ridiculous amount of fraudulent activity, and this is one of the examples. If you had read the email, if you'd seen their newsletters, if you'd gone through the videos, the expectation is you just do their stuff and you make gazillions of dollars. Gazillions of dollars day trading 15 minutes a day. And it's bullcrap. These guys don't even do the real trades. So don't get caught up in the hype. Don't get caught up in the garbage of these people that are peddling just ridiculous full of garbage type of returns. I mean, it's kind of funny. I think early in the year I told you guys about we had an annualized like 8,000% return. Don't buy it. Keywords, profit guarantees. Everyone makes money. It's easy. Annualized returns. All those type of comments are simply ways to get your excitement up to then take you for your money. So please don't get caught up in these ways. Don't spend your time on them. Don't spend your money on research you can do yourself better than most of these people and probably interpret it better as well. It's just not worth it. Don't get caught up in these type of emails. Send them in spam and off you go. All right, big picture. Kind of interesting because I didn't expect it. The big picture talked about homes again. What it all means. It may not be as much as the seller's market and the housing market as it was a few years ago, but that doesn't mean in its entirely a buyer's market either. The existing home market is between a rock and a hard place, pressured by tight supply and rising, or maybe we should say a normalization in mortgage rates. So a lot of what briefing.com is trying to tell you is there are a lot of people that haven't unlocked the profit in their home. I'm one of them. And the housing market, because we've been spoiled for over a decade, roughly, of super low interest rates, the market feels that the housing market, even with its low supply, is not booming right now. And I guess that makes sense. Home prices are still higher than we expected, higher than 3 years ago, right? Higher than pre-COVID. Yet interest rates have seemed like they've gone through the roof. Interest rates between 5 and 6%, even 7%, are not necessarily through the roof. On a historical average, they are slightly high. Could people be waiting for a drop in rates? Probably. Will that drop in interest rates happen this year? Maybe 0.5% to 0.75%, but probably not. Probably not until November, December. We talked about it forever ago. There's no way that you're going to get 200 basis points of interest rate cuts. And I got to tell you, I somewhat feel sorry for people who were talked into selling out of their bonds that lost them money last year in a really big up market. And we're told to sit and wait on the sidelines for interest rates to come down or to try to purchase new bonds that can be sold at a premium this year because they're going to be interest rate cuts. Those bonds will somehow pay more interest after we get this 2% cut. It's not happening. And the easiest way to make the comment here really comes down to, and I'll say it kind of simply, right? A standard 60-40 growth portfolio is killing people's retirement. It's really been that simple. Where that 40% that's in bonds has all but disappeared. And in the last 5 years, you've had a 40% loss, even though you've had these gains in the market. It's how you're still flat even while people like me are out there making money off you. It's funny because there are a couple of you who'll say, well, Kevin, I'm waiting for this pop in my portfolio. And I get it, but I probably also haven't charged it yet. I'm willing to let that pop happen before we start charging you any money. Need you to be up before I can charge you some money. All right. This week, big week in earnings. Well, actually, let's take a quick look at our markets. Still bearish, but we're turning. It'll be interesting to see if we break the 50-day simple moving average. A couple of you called me and asked me, how did you know we'd go back down towards 37,500? I didn't. But that was the logical place that we'd get a stop. It's at an S2 support level. It's the way the market moves. If you always thought the market was going to go up from November, you don't understand how markets move. So it's not that I didn't, it just was common sense. It's technical analysis. Same thing with the S&P. We went down to that S2, touched 5,000. We actually even broke below it intraday to 49.53. And the NASDAQ doesn't look good either. But the short answer is we'll probably turn. We'll probably have a positive week after 3 to 4 weeks of being down. We'll probably have a turn higher. I'm looking at the market in earnings plus technical analysis, seeing something like this, bouncing off the oversold, being in the middle, oversold down here on institutions. It wouldn't surprise me to see a couple up weeks, 100% based on earnings. We can see some big movements higher. April, I think it's down 4%, maybe, well, we were up 0.8, maybe 3.6% right now for the month. I don't exactly know. I think it's down 3.6% for the month. That's what I'm trying to say. A nice week this week, a couple days next week. We could see April only being down 2%. Earnings, a lot of earnings are coming on tap. Verizon, Zion, Cliffs, and Nu Skin. A little shocking. Someone asked me today, well, Kevin, Verizon gave pretty good earnings. Why didn't they go higher? Guidance. Guidance is an issue. They were down 4.67%, beating top and bottom line. but their guidance was a problem. Their growth rates were a problem. So that's why Verizon didn't continue to move higher. Yes, we had it protected up at $40 a share. So your protection was right where it needed to be. Tuesday, Halliburton, JetBlue, Pepsi, UPS, Lockheed Martin. I think Lockheed Martin is before the market opens. Visa, General Motors, Tesla. Wednesday, Alcoa, Discover Financial Services. Las Vegas Sands, AT&T, GameStop, General Dynamics, Lithium Batteries, LAD, I believe, IBM, Meta, and Boeing report on Wednesday with Ford. Let's see, Thursday, Altria, ADT, Altria is MO, American Airlines, Bristol Myers, Caterpillar, International Paper, Google reports, HubSpot reports, Microsoft reports, Roku reports towards the end of the day. Friday, Chevron, ExxonMobil, your oils. Economic reports for the week, durable goods on Wednesday, GDP on Thursday, and PCE core pricing on Friday. If we have lower than expected inflation numbers, we could see a nice run on Friday because of the pullback of about 6.5% that we've received here in the last couple weeks, the last 3.5 weeks. So plain and simple, be ready for an opportunity to see a bounce, especially on Friday if inflation numbers come the way that we want them to. People are going to jump to the conclusion that we're going to get interest rate cuts, which we won't, but it's something to watch and pay attention to. All right, I had some interesting reports here. Americans think they need almost 1.5 million to retire. Experts say to focus on another number instead. I'm not going to ruin it for you, but I definitely would say pay attention to this article. It has a couple interesting points if you're thinking of retirement. Google terminates 28 employees after the multi-city protest. Read the full memo. Plain and simple, if you piss off your boss, you're going to get fired. That's what it comes down to. I'm to a certain degree, I think it's I'm on the side that I think it's a free right to work. I think companies can fire people for a lot of reasons, and this is one of the reasons I agreed with. So, interesting article to read about how Google let go of closer to 40 people overall. Breaking down the market sell-off and odds, the 5% pullback turns into a 10% correction. A little bit of a scare tactic. I would not expect the market to fall down by more than 5%, and it actually has fallen down almost 6%. So the short answer is I would think a bounce is coming, and I think we're going to return up to that 50-day. I don't think we're going to go down to a full correction at 10%. All right. Interesting article. Walmart got caught kind of like the gas guys. Wrong prices and wrong weights. If you were doing some type of meat, pork, poultry, oranges, grapefruit, you could claim up to $500 from Walmart with some of the purchases that you have for them not doing a great job and for overcharging and not giving accurate weights. And then pretty interested, we've heard the last couple of weeks about AI. If you're investing in the AI theme for the long haul, here's how you pick the winners. It really comes down to cash flow. Please feel free to read this article. Very informational on how important cash flow is. And it's just something that you should pay attention to. As AI is relatively new to us, the more information you can understand and read about, the better you're going to be to understand where those opportunities might be in artificial intelligence. With that said, what questions do you guys have for me today? Keith will be gone next Tuesday for 10 days. He'll be in Europe. We may be canceling next Thursday's, meaning May 2nd's trade findings and adjustments, but I will figure that out. I'm covering this week because Keith has a new baby at home too. But any questions you guys have for me today? Are there any questions I can go over with you guys to do my best to answer them for you in regards of today's market or what we're trying to do with our portfolios? I'm going to give you 30 seconds to type in any questions that may come up. I appreciate the questions earlier. I think that was Russ and Jacob. Thank you for the comments or questions. Russ on the what positions are still in play. All right, guys, if I see no questions coming in, I look forward. Right, anything to get into soon. So yes, we're out of Meta. You might see a push into Micron if you're not already in Micron. And I think we're going to introduce 2 new stocks the second week of May. We're waiting for some earnings and we're waiting for some trends to validate what we're going into. But yes, if you're out of Meta, you will see a stock replacement strategy, elite bull call replace those shares that you may have had. And if you're not in Micron, we will push some of you into Micron. It had a 20% pullback, so it looks good. And more importantly, second week of May, we're going to introduce a couple new positions that we've been looking at that we typically don't get into mid-year, but we think they're going to be an opportunity for you. So that's the short actors. What sectors are the new stocks? One is technology and the other is finance. So technology and finance, that's what we're looking at right now. But we want them to prove themselves before we throw them out. And that's what we're waiting for. We're waiting for earnings and we're waiting for some sector earnings to validate that our numbers are correct. And again, this will most likely come out to you guys, May 6th in the commentary, May 9th, the trades findings and adjustments, or May 13th. We're really pretty close to calling it. We just want to see earnings that are occurring next week. And then we're going to start to throw some positions in. And yes, so the comment was just made, well, can't you protect it? The short answer is yes. But we don't want to put you into something that starts going down, that our puts are in play right out of the gates, that may have a couple earnings rotations to get through before we're seeing it go higher. So we're doing the best we can to allow to get the proof that we want to jump into them so that we feel comfortable that things are going to keep going higher. So that's the short answer. Yes, we could throw them out today. We could do some puts on them. We just know that psychologically, a lot of people don't like getting into the newest, greatest trade, having it fall down. It's easier to quit and give up on them than to say, all right, let's let these run for a while. So that's why we're trying to hold these two close to our chests. Are there any other questions? Financial and technology. All right, guys. Hey, look forward to seeing you on Thursday. I do have a trade I'm interested in showing to you guys. I appreciate you guys all being here. I'm trying to delay, so if there are any other questions, you guys can ask them. But if not, I appreciate you being here tonight. I hope this is helpful. Yes, I can definitely call you, Jim, as soon as we're done here. Guys, have a wonderful evening, and we will talk to you soon. Bye-bye, everyone.